Welcome to Redefining Real Estate. I'm Rylan.
And I'm Morgan. Expect a mix of education, humor, and authentic conversation as we explore all things real estate.
Let's jump into today's episode.
All right, so today we're going to be giving you guys some hot takes on multiple offer situations. Whether you are thinking about getting into the real estate market, maybe buying in a certain time of the year that you're concerned about multiple offer situations, or you're just genuinely curious how they work, we're going to talk about all of that today. So I know that most recently, you and I have both had situations with multiple offers with our buyers. And so it's just so interesting to talk about because usually you see this in a seller's market. Or,
Right.
Usually people would think unless it's the interest rates are really low, we're not going to have multiple offers or whatever. But here in Bryan-College Station, we are seeing multiple offer situations pretty frequently in certain price ranges. So tell us a little bit more about what you've seen so far.
Yeah, I had some showings over the weekend, and one of the last houses we were taking a look at of the day, it was like Sunday at like 4-ish or something, kind of last one, it was actually an open house, which I thought was great. We can stop by, huge windows, so I didn't really schedule anything because it was going to be open for like 4 hours. But anyways, it was only on the market for like 4 days. And I checked it on Friday, saw that it was a pretty new listing. Seemed to match what my client was looking for. It was right around the 300,000 price range. It was an older home, but had been remodeled, garage conversion. Everything looked really nice.
So it was like a 4-bedroom?
It was a
or
three
Okay.
converted to a 4.
Got it. Okay.
Yeah, it was pretty cool. So it was a 4-4 because they added a bathroom too, like a master suite area. But anyways, it was vacant, and I really liked the house, and I felt that they would too. So we went and looked at homes all day, and then right before I pulled up the MLS listing right before we went and looked at it, and the agent actually changed the private remarks, like only accepting offers until Monday, already have multiple in hand or whatever.
Yeah.
And I was like, dang, like already, okay, told my client that. He was like, what are you talking about? Like, why would there be multiple offers? And we went there. It was a super clean house. I mean, they did everything perfectly. It may have been someone's first home, or maybe it was an investor of some sort, but no cut corners. But anyways, so there's multiple offers already on the property. The open house agent, I think she wasn't the listing agent, but
She was just
an
at the
agent.
brokerage or whatever.
Yes, yeah. So she was like trying to tell me as much as she could, which you can't tell me everything, obviously, but she's like, yeah, she already has 2 in hand, she's expecting 2 more, but she wanted to hold it open today to see if there was anything else out there. So in my mind, I was like, okay, maybe the ones she has aren't great, maybe they're not full price, or maybe she's already like way over asking price, but she's just looking to see what she can get. But my client, like, he wasn't necessarily ready to start competing. Like, he didn't think that the market was that, fast paced or competitive. And he was like, whoa, like that's wild. I didn't really expect any of that. And mind you, I met this guy on Thursday, so we haven't really built a huge relationship, haven't been talking for a while. But had we been, we probably would have had this discussion a lot sooner. But we had that discussion outside the home right before we left. And it was kind of like a wake-up call, because I think a lot of people think that right now it's like super dead and super slow.
Yes.
But this time of year, I mean, we've been seeing a ton of market activity. So
Yeah,
that was kind of my experience. But he saw the competition. He was like, okay, let's back up a step. Like, I'm not ready to jump in there and start trying to outbid people. But that was my experience. What's been yours?
So for context, we are in mid-March right now.
We are in mid-March.
So we are not to the summertime. It is still faux spring. So we are getting like warm afternoons, but the
Yes.
weather is nicer than it has been in January and February. But I have also experienced the same. And I think for many people that have been looking over the last couple of months, there was just a lack of urgency of, I have time. I don't have to make a decision right now.
Right.
And then once you add in the element of competition, then people are like, no, this is the one I want. And it's very interesting how that can like flip someone's perspective so quickly. I had some clients that had been looking since like mid-January-ish. And then like a month later, we ended up making an offer on a house we had seen. And even though it had been on the market for like 40, 50, 60 days, it ended up going into multiples that weekend when we made our offer. We were the first ones, and then of course 2 more followed.
Jeez.
So I will say, as like for knowing the perspective of a listing agent, especially with an open house, The ideal listing scenario is to list on a Thursday or Friday.
Right.
Already schedule an open house, especially if it's vacant.
Yes.
And then just see it through the weekend. Because I know I've had multiple offer situations similar to what you mentioned. We still hold the open house because
Yes.
it's like you never know what buyers could come through or what other interest would happen. But it is very frustrating when you start working with a client and they're not prepared for that. But it's also like you can't really prepare like you can tell someone and give them a heads up. You can frame the market a certain way, but it's always not the same as like going through it.
For sure. Yeah. Whenever we, understood that there's already offers in hand, the whole perspective changed, and the price was honestly a little under market value for sure. They were definitely trying to move the property as soon as possible. Seller was offering no repairs, no survey. So there was those two things that you kind of had to be aware of. But again, for the price of the home, I think it was fair. So it was an interesting time because, again, I just met the guy, I think Thursday, and that was my first time meeting him in person that Sunday. So it's not like we had like a full-on buyer consultation. We talked through a bunch of things, different scenarios. It was super fast-paced because he was also out of town too. So yes, interesting scenario, but also something that I felt I really wanted to kind of coach him on more and like talk with him more on it prior to just kind of like jumping in feet first,
Right. Well, it's like you don't also want to scare someone about the market. Like you don't want to say, oh, there's a lot of competition in this price range, and then them be like, oh, well, I don't know if I actually want to do this.
Right.
But it's also like you want to give them a heads up.
For sure.
But until they really feel it, then they won't be able to know the true like perspective, I feel.
Right. Yeah. And it was also like somewhat top of his budget too. And I was like,
so you didn't want to push it already.
Right. So let's just say his budget's like a flat 300,000. If there's already 3 offers at a flat 300,000, you can do plenty of other things to try and make it more appealing. But ideally, the seller wants to net the most amount at the end of the day, if that's their main goal. But he just wasn't necessarily prepared to start being, in a bidding war, if you will. Because, we talked about the whole like highest and best and all that. And he was like, I kind of I'd rather have like, a little more negotiation power. And I was like, yeah, I understand that. But it was just kind of the scenario that we were in.
Yeah, I think one thing that can be helpful for people to envision is like, obviously you want as a buyer, you want the most negotiation power. You also want a property that fits your criteria, and you want it to be in good condition.
Yes.
And so there's like those 3 things. If you imagine like a triangle, it's like, okay, great location, great condition, and then like negotiation power. You're probably going to miss out if you have the other 2. There are a few things that we can do in the contract to help if you get into a multiple offer situation that don't have to do with sales price. Like you said, if someone's max budget is 300,000 and you can only go so far up, but I do think in general shopping underneath your maximum budget is ideal to have that negotiation room, especially for multiple offer situations.
For sure.
Because I recently had a client that went under contract where the sales price was $215. When I ran the comps, I felt like that was undervalued. Okay. And they had already had an offer in hand when we went and saw it. So I was like, your price range is under 250. We're at 215. Let's bump it up, because they also needed seller concessions.
Okay, gotcha.
And they needed a lot of them to cover their closing costs. So I was like, let's bump it up. Like, let's adjust the difference, because I feel confident that when the appraiser comes out, I feel confident I can give them the comps needed to justify this sales price.
Yeah, for sure.
And we're still under where way under where you wanted to be.
Yeah.
And we're getting you the house you want with all the things you wanted.
Yes.
So there's a lot of different things that you can do. And so I know we were going to go over some things in the contract just on a higher level, but to frame that up, say you're looking at a house that's $275,000, it's in multiple offers, your max budget is $300,000. And we don't know what the other offers have come in at. Say they have 2 other offers in hand. We're going to go through what things you can consider adjusting to make your offer more competitive. Yeah. And obviously, every situation is going to be different. So these are just going to be some higher level items that we're going to go over to give you guys an idea of what it looks like going through the contract.
Yeah, for sure. I mean, I think step one is going to be the listing agent. Obviously, we have a contract in front of us, but building some relationship with the listing agent is going to be huge. The team goes over that all the time. But also, too, like just seeing what's important to the seller. The seller may not be necessarily worried about getting, 50,000 over the asking price, right? He may just be looking for the fastest close possible to move as soon as he can, or whatever the family may be doing, or if it's an investor, maybe he's using the equity to go buy something else in a different state. Like, who knows? But I think that's always going to be like for agents, kind of like step one to see what's going to be most important throughout this document. Typically, I would say it's probably price and time frame,
Yeah.
obviously, but you never know. So it's always good to check with them first, see what they're thinking, and then kind of start working on your offer from there.
Yeah, well, and to that point, it's hard to know like what your agent's relationship is with other agents, but in general, if they're an active agent, hopefully that they will have relationships with other agents. Hopefully they'll know them. My goal is to be your agent's favorite agent. So I want to have a great relationship with all the agents in the area. I like to go get coffee with them, and I know we talk about that on the team too, is like just cultivating a community of like-minded people versus like this competition. Like, if I can make your agent better, let's do it. We want to be collaborative in everything that we do. So
For sure.
yeah, step one. And then what's the second thing that you're thinking?
Second thing I think would just be sales price. That's going to be probably the biggest needle mover is what's like the number you're coming in at. Having the conversation with clients about potentially overpaying for a home, like say the comps are at 275, but you want to offer 285. It's kind of a difficult one to talk about, but again, if they plan on being there for a while, financing that over 30 years may not be too much of a bad thing for them, I guess you'd say, for lack of a better word.
Yeah, if this is an investment property, or if you're not sure whether you're going to be in this area long term, then buying at the top of the market is probably a huge concern for you, because when you go to resell, you're not sure if you're going to have any equity to get out of the home.
Right.
But like you said, if you're holding on to it for 5+ years, most likely the equity is going to be there, because our market is an appreciated market. But I do think that on the flip side of things, where it's listed high and then it goes into multiples and you don't even have the data to justify where that's at, it's an even harder
For sure.
argument to make. And that's one of the situations that I had recently where it had sat on the market for a while and then it went into multiples when we submitted. And you have to like completely switch up your mindset on that of like, okay, we put in our first offer because it had been sitting for a while and it was very not competitive. It was all in favor of the buyer. Now it's in multiples and now we have to switch it up.
Yes, for sure. Do you think it's worth mentioning different, like loan types, or if you're going to be cash or not?
Yeah, I think with financing, obviously you're like bound by what you can do, right? But whether you're doing VA, FHA, or conventional, there are just a couple of things to keep in mind. And more so that if you can qualify for a conventional loan to a seller or to a listing agent, you are going to seem the most financially able, just because for a conventional loan you have to have like the higher credit score, not always the larger down payment, because they do offer like 3% down loans, but that's how it comes across. And then for FHA and VA and USDA, like all of those government programs, a lot of times you don't have to have as high of a credit score or as high of a down payment.
Right.
And so if you're comparing like your VA loan versus a conventional 20% down and VA's putting 0% down, to a seller that could seem a little risky, and that's like one of the things that VA buyers get a lot of flack for, is like they think people don't like their loan type, but it's because they're comparing it to like, okay, well this person's putting 20% down, so like if the appraisal comes in a little low, they have more like
They can
leeway,
work with it,
right?
for
To
sure.
go up on the price or what have you. And so beyond that, having a lender that you know and trust is very important. You talked about timelines and closing quickly. There are a lot of bank lender or like bank loan officers that claim they can close in like 3 to 4 weeks. In my experience, they really need 4 weeks. If it's a bank, like if it's a, Wells Fargo, Chase Bank, etc.
Right.
Unless you're just like a super overly qualified buyer. Whereas some mortgage lenders can close in as little as 2 weeks, and that's like legit. Like they can get you through in 2 weeks,
Right, like proven.
guaranteed.
Yeah,
So that's something to consider when you are interviewing lenders and loan officers for your specific situation.
for sure. Yeah, I think it's always good to like understand that most conventional buyers can qualify or overqualify for everything else, but
Yes,
not all like FHA buyers can be a conventional buyer as well. So,
correct.
yeah, I think it just looks a little stronger if you can, but I don't necessarily think it puts you out of the race either. You know?
Agreed. Agreed.
Anything else on sales price other than going more?
Beyond what we talked about, I think that's it. You know, we'll just for ease of discussion, we'll just imagine that there are you know, like we said, say it's a 275 list price, comps justify it, and your max is 300,000. You feel comfortable offering 275. We don't know what the other offers look like, so we're going to try to make everything else as competitive as possible in here for you guys and talk about the different aspects of that.
For sure. All right, next we have earnest money. Typically we're seeing 1%, but as you know, we're trying to be a little more competitive. So putting a little extra skin in the game could just set you up just a little bit, especially because it's not like you're never going to see this again.
Right, and we'll talk about the differences between risk and cost throughout the contract.
Yes.
So in this case, this is going to increase your risk as a buyer because that earnest money deposit is something that obviously is refundable when you close, but if you end up terminating on the deal or you default on the deal with, you know, not in the means of the contract, like, again, you'll talk to your agent about all of these things, hopefully, when you write an offer.
Hopefully, yes.
Yes. But if you terminate on the deal and there's a likelihood, or not a likelihood, but a chance you will not get that refunded back. And so increasing that amount increases that risk for you, does not increase the cost, because if you don't end up getting your offer accepted or you don't buy the house, then you don't pay that money.
Yes, very well said. Yeah, the good thing to note there is that like if you terminate within the option, then you're fine, right?
Right, you just pay your option fee and then
yes.
you get the earnest money refunded.
And then if you're outside of your option and all of a sudden something goes wrong and you feel that you have to back out, then yes, that's where that would be long gone.
There are some timelines in the contract that do protect you, but again, caveat, your agent should be talking to you about all of these different aspects, or at least know what they are in the case that you get into that situation.
So what number would you put in the option, or not, sorry,
In the earnest money?
earnest money
Right,
at
so
285?
It all depends. 1% we talked about is the norm. You can go a little bit above 1%, but it's about what you're risking, because you could put $10,000, right, into a seller that says, oh crap, like these people are committed, because
Right.
they could stand to lose $10,000 if they default on the deal. And then the seller would keep that money. So you could put as high a number as you want. I typically tell my clients, depending on the competitiveness of everything going on, like if there's one other offer, you know, let's go at least a little bit above 1%. If there's 5 other offers, we may want to consider, of course, what you're comfortable with, but also maybe consider a higher amount.
Right, for sure. And if they're super serious about the home, I think that would be a completely like legit thing to be doing. If they're not, you know, thinking about terminating, or if they really need to get the home and they really love it, I don't think that putting down a little extra cash for it would like scare them, you know?
Yeah, and I think the hard thing is, from a buyer's perspective, is, well, I don't know yet. Especially if it's a resale home or a home that's over 5 or 10 years old. They're like, well, I don't know yet, because inspections and who knows what could come up. But again, there are timelines to protect you for all of that. So this is
Right.
like, you have to remember, this is like your first impression to the sellers. So this is everything to them. Even though we could go back and negotiate differently during the option period, this first initial offer is everything.
Yes, like this is kind of how you like introduce yourself to the deal. It's like, here's what I've got going on,
Right.
you know? Additional earnest money. This is something that's, I think, not really used too often, but I think it can be a great negotiation piece if you, I think, use it correctly.
I agree, and I think because of the intricacies of how it works, I will say, yes, it's a great option, and you should talk to your agent about doing that if you are interested in making a more competitive offer.
For sure. All right, termination option. So typically in our market, we're seeing like 7 to 10 days, I would say is probably normal. This is how long you have to terminate for no reason once you own a contract. We've positive we've covered this before in our previous episodes, but obviously the seller would want that number to be 0 ideally, but you have to put something in there for your buyer to protect them because, again, we're still trying to do what we can for our clients. I would say competitive would be maybe 5 days if you are in the right time of the week and if you know that the inspectors have availability in their schedule. You can maybe bump those numbers down a little bit, but what do you think?
I agree. I think the lower the number, the more competitive, and you still would like to have time to do inspections. So I know for myself personally, a lot of times I'm writing these offers for like that are going into multiples. It's like 8 or 9 o'clock at night. So I don't know if all agents do this, but there are times where I schedule inspections for my clients, even though we do have a transaction coordinator. So I know where to go and who to talk to see what the availability looks like. And right now it can be difficult because many inspectors are booked out because
Yes.
of how active the market has been.
Yes.
So that is the only thing that there are some things out of our control, but we also, if you have, the connections and you've worked with the same inspectors, you may be able to get, a little bit closer up into where you need to be for your option. But that's something that your agent should advise you on, depending on the time of the year it is and, where you are in the week.
Yes, for sure. And also too, worth noting that's a risk, not a cost.
Correct, because if you don't end up buying it or your offer doesn't get accepted, then there's no additional cost to you.
Correct. And the only thing you're really risking is not getting all your things in a row before that termination is over with, and then maybe having additional negotiations or something like that. But again, you can always extend once you're at that point, maybe, if the seller's okay with that. But yeah.
So what's the next thing?
Next thing is going to be title policy and survey.
So in our market, the seller typically pays for the title policy. You can offer to pay for that. That is money out of pocket, and your agent should be able to tell you how much that is. There's a calculator on one of the local title companies' websites if you did not know. So you can calculate that. It's based on the sales price, and that is money that is not being financed. That is money that you would be paying out of pocket at closing.
Yes.
So obviously that helps the seller's bottom line, where for another offer, even if it's $2,000 more than yours on the sales price, if you pay for this, you could potentially be netting the seller $2,000 extra dollars.
Correct. Yeah, that would definitely be a cost for sure, and just looks better because it takes one thing off the seller's plate.
Correct.
You were mentioning before we started. It's like what was it? Gambling chips.
Yeah, imagine you have a jar of chips that every chip that you move over is another, I guess you could say, just another chip on your side of how competitive your offer is.
A negotiation piece.
Right, a negotiation piece. So each time we're saying oh, well, you could increase this or you could lower this, that's that chip is going into the pile, and the more chips you have, the more competitive your offer will be.
Right, for sure. Okay, shortages in the area, expensive buyer or seller?
I think for this one, again, it's kind of a conversation you need to have with your agent depending on the situation.
Right.
This is in regards to shortages in area with the survey. Basically, there's a buyer and a seller checkbox. If you want to make your offer the most competitive as a buyer, obviously taking on all additional costs would be the most competitive, but it really depends on the situation. So talk to your agent about that one.
Okay, next we have survey. So that's obviously going to be a big thing for people who are financing a deal. Lender's going to have a good one in hand. So let's say that the property doesn't have one on file. Let's say it's not in the MLS. You talk to the listing agent. It's yeah, seller lost it. There is no survey. What's your plan of approach?
So depending on my buyer situation, again, taking any cost off of the seller in a competitive situation is going to be ideal. So if the buyer can pay for a survey, that can be something that's paid out of pocket at closing. It's not something that you're financing. It's literally cash at closing that you're increasing. Right now, it's around $1,500 in our market. So I would mark on there that the buyer would be purchasing it. So that would be my recommendation. But again, every situation may be different. There may be a survey. It may be old. There could be, you may not be financing. So there's a ton of different options there.
Without a doubt. I think we're all right skipping HOA. Is that okay? Or do you want to, because I don't have an HOA doc with us.
Yeah.
There are some things in that doc that are helpful.
Yeah.
But we could just keep it to the contract as of now.
Yeah, I think again, just as a buyer, any additional costs you can pay for that the seller typically would do it if you are very serious about this. But this is something that your agent should be advising you on and telling you, this is normal in our market. Seller usually pays for this or pays this much. If you want to make it more competitive, do this.
Yes, for sure. Property condition, we'll just say the buyer has received the seller's disclosure. Buyer accept property as is. And then,
Yeah, for property condition, ideally your listing agent has provided a seller's disclosure. And the reason that a seller wants you to mark that you've already received it is because if you don't, then once you receive it, there's another timeline that starts where you could terminate the contract based on whatever is in that. So if you don't get the seller's disclosure till after the contract, then the seller is just at more risk. So hopefully that listing agent provided a seller's disclosure. If not, then you just have an extra timeline to potentially get out of the deal.
yes, and we're not trying to do that.
Yeah.
All right, residential service contract.
Yeah, a home warranty. A lot of my clients usually, they don't know what this is when we talk
Same,
about it,
yes.
or they don't want one. We always try to negotiate one into the deal if it's not competitive, because it's just an extra thing for peace of mind. It's basically the seller in our market will cover 1 year of a home warranty for you. That way, in the case any large systems or appliances go out, you have some sort of coverage. So usually that would be $750.
Yep.
If it's a competitive offer, lowering that or making it zero, if you're comfortable, is ideal. But again, talk to your agent about this, depending on what your risk level and everything is at.
Yep. Paragraph 8 doesn't really apply to this at the moment. Paragraph 9, closing day. So I think this is going to be a big one. At the start of this, we were talking how the two probably biggest needle movers of this whole thing would probably be price and then how fast can you close. Or maybe the seller's looking for maybe a little bit longer of a close. Who knows, right? But I think this will be definitely like a pivotal spot with this contract. What are your thoughts?
So typically you would see a 30-day closing timeline in our market for finance deals. The shorter you can make that, the better, if the seller wants, like if they value time. Because that's another reason that like cash offers are usually winners in multiple offer situations, is because they can close in 2 weeks and there aren't any additional timelines like
Correct.
financing contingencies that would be at play. So yeah, that's why also, like we mentioned earlier, the lender you use or the loan officer you use is important.
Yes.
Of course, relationships are important. You want to use local people, but also you need to be using people who, in a competitive environment, can get you the deal that you want.
All right. Special provisions, do you want to touch on that at all? Or do you want to keep moving?
With special provisions, there's not really anything there, but as far as like asking for seller concessions in paragraph 12, you should obviously talk to your agent about this. You need to understand how much you absolutely need. Your lender and agent and yourself should have had that conversation. So if you absolutely need a certain amount, there's not much you can do there, but ideally putting zero in the seller concessions amount would be ideal, because if you switch your perspective of like framework here to put in the most competitive offer, you want to net the seller the most amount of money,
Right.
even if you're not financing the most amount.
Right. That's pretty much the big ones.
Yeah, I think we covered most of the big ones, if not all of them, just in the main contract. If you're financing, you will have a third-party financing addendum in addition to this that have additional timelines. Once again, the lower the timelines are, the more competitive it can be, but you also have to juggle that with the risk of like what that could mean for you, and your agent should be advising you and answering your questions throughout this process.
Yes, I agree. I think the HOA doc too is maybe not as big of like a needle mover, but there are some things on there that can make your offer look a lot nicer. Same thing with the third party financing, and then a couple other docs if they're going to be required too. But as far as just at a very high level, quick run through the main contract, I think those are going to be the biggest ones.
Yes, agreed. And if you are concerned about multiple offer situations, obviously you're welcome to reach out to us. If you want to avoid them completely, new construction may be the best option for you, as they're more of a first come, first serve kind of thing. So it's not like a bidding war, which I don't really love that quote or like that term, because
Right.
that's not really what we're doing.
It's like an auction, right?
Yeah, it's not an auction. It's like, okay, well, we're competing with multiple offers, but that doesn't mean this is an auction scenario, at least in our market, because the pricing and like competitiveness isn't, like the demand isn't there for that kind of like scenario that you would
Right.
typically hear. But anyways, obviously we went through the contract. You can understand there's a lot more to it than just the sales price that can net the seller thousands more. So yeah, if you have any questions, let us know. Is there anything else you wanted to add on that?
I guess if if you're looking for a lot more of like an in-depth strategy session, I guess you would call it, for a multiple offer scenario, or if you're worried about those and you want to just get super clear on all the terms in the contract, let us know. Obviously, everything will be linked down below for them. And yeah, that's all I got.
Great. Well, we will catch y'all on the next one. Please subscribe and share this with a friend if they are considering getting into buying real estate anytime this year or next. We would love to connect with you guys and answer any questions that you have. Peace.
Thanks for hanging out with us today. We hope you found something useful, or at least had a good time listening.
Yeah, if you enjoy this episode, feel free to subscribe or share it with someone who might enjoy this content.
And if you have any questions or topics you want us to cover, reach out to us on Instagram. Everything will be linked below for you.